Well, look, good evening, ladies and gentlemen, and thank you for making it to Imperial College Business School this evening. Big thank you to all, given braving the weather and the conditions getting here. It's not the easiest place to get to, given where the tube is located, but some of you may have found the tunnel, which give you some respite. As usual, my name is Khalid Talukder. I'm from IFX Payments, alumni of the Business School 2004. Sharmil Patwa here, who is actually moderating the panel this evening, is a fellow alumni. And when we got together in the summer, we thought about doing something regarding the very topical discussion regarding FinTech. Now, for the women in the audience here, statistically, men measure 2018 by when the World Cup happened, right? So this was, just before the World Cup, I think, if I remember correctly. So we got some ideas together and we thought, well, what could we do as people working in the industry to give something back? And update academics, fellow practitioners, fellow people in the industry, looking to come into the industry to see what it's all about. So we sat and we thought, and thanks to the efforts of the business school, Cecilia, Hazel, Erin, and team, we were able to put together this evening for you with a distinguished panel that are thought leaders in their own space. And please use the time as effectively as possible, because the knowledge they have, they've probably got a combined over 100 years plus, right, across all the professions and the depth that they have. But dare I say it, the reason we're here today is, what is FinTech, or what is disruption? Is it enhancement or evolution? Are we having an Uber moment or an iPhone moment within financial services, or dare I say a Sky TV? Or are the banks just waiting to catch their breath and come back with force due to the imminent interest rate rises? And we all know, being an ex-banker, how banks make money, right? So tonight, and by special request for one night only, you have the chance to listen to the guys here this evening give their thoughts and views, whether it's here to stay, whether it's going to be part in the fabric woven into our lives as it is in retail. Will it be the same for corporates going forwards? So look, please welcome our guests this evening. Sharmil will moderate the panel. There are a list of questions that we have canvassed and collated quite carefully. There'll be a chance and opportunity for you to ask questions at the end. There'll be a Q&A session, but please use the time as much as you want, and I wish you a good evening. Thank you.
Thanks, Khalid. So, is this on?
The mic is.
This one? I don't think I need this. Hi, everyone. Thanks very much for coming. Before we sort of dive in, let me just briefly introduce our panel, our esteemed panel, a number of which I'm very privileged to have known for quite some time. So to my left, we have Andrea Dunlop, who is CEO of Merchant Acquiring Europe at PaySafe Group. Andrea's got a deep knowledge across many aspects of payments and is very highly regarded in the industry. So she's got a number of accolades. I think I've only got a few of them here, but most influential woman in payments in 2018, Payments Pioneer by the UK Payments Awards in 2017, has also been voted #1 in the 2016 Payments Power 10. So welcome to Andrea. To my right, I've got Sean Kiernan. So Sean has recently set up a very interesting entity called DAG Global. This is the first regulated bank in the UK which is able to handle crypto instruments. Prior to that, Sean was the COO of the London office of the first bank in the world to offer crypto products to clients. So welcome, Sean. To my left, I have Mike Simcock. So Mike's the CEO at Clearmacro, which was founded in 2014. It was founded by a very experienced team of investment management professionals and technology professionals. So Clearmacro's mission is to provide a centralized data-driven investment engine to anchor investment decision-making, enabling investors to clear the noise and connect the dots. So Mike's worked in financial services for approximately 30 years. He's got a hell of a lot of asset management experience, and prior to CEO at Clearmacro, you were at GIC, correct, Mike? He's also worked at T. Rowe Price and the Swissco Group. So we're very pleased to have Mike here tonight. We've also got Alex Powell coming later on. So Alex Powell is the CTO at Euroclear for UK and Ireland. The trouble with having such an amazing panel tonight is that they're in a lot of demand. So he's at another engagement, and he should be with us fairly soon, but we will kick off regardless. So as Khalid said, the topic of discussion tonight is about, are we actually experiencing disruption in financial services, or actually is what's being badged as disruption really just evolution? And so I thought perhaps where we would start is by talking to each member of the panel just to get their views on, what really is disruption. Andrea, would you like to kick off?
Yeah, so I think we haven't seen, I guess, the level of disruption in the central bank systems that we would have probably hoped to have seen. And I think it's fair to say that the banks remain the incumbents. And I guess if I'm truly honest, from the world that I sit in, I don't really see that changing massively in the short term. What I do think is there's been a lot of change around the edges. And I think a lot of companies have come in and are able to offer the value-added services, or are starting to add value-added services that I think the banks have struggled to focus on. I have some empathy for the banks. They have horrendous legacy systems. And I think the challenge for many of the banks is adapting to the change in regulation, the opening up of the systems. I think we're going to touch on open banking in a little bit. But I think it's a challenge for the banks. So I think to answer the question, no, we haven't seen, massive disruption at all yet, in my opinion. Okay. And, I don't think it will happen in my career, to be completely blunt. Okay. But maybe for some of the guys here it will happen, but not in my time. Okay,
interesting perspective. Mike, what are you seeing in the more institutional and wealth management space?
Yeah, I think we've seen clearly some disruption to date. I think if I can try and lay out a sequence of events, because I think we're on the verge of, I hope, significantly more disruption. I think we'll probably talk a little bit later about the triggers for that.
Yeah.
But I think, if I kind of at least look over the last 10 years, the biggest disruptive effect on the kind of front office and kind of investment side has been the growth of passive instruments.
Yeah.
And lower cost instruments. And I think McKinsey just released a report. And I think, the last 8 years consecutively, there's been huge inflows to passives and huge outflows of active kind of investments. So that's really laying the kind of the foundations for the next wave of disruption that needs to occur to kind of address cost issues for the industry. So I think the second kind of plank really has been this kind of huge explosion in kind of information sources that we've seen over the last kind of 5-6 years.
Yeah.
Now I think that's happened and it's happening. It's continuing to happen. I don't think it's had as much impact as it should in terms of institutional and front office type of consumers. I think it's a bonanza for investors, but it's also a risk because actually this huge amount of information and data that's available to you now requires a framework and a strategy to handle it. And if you don't have that, then actually it's not necessarily a good thing. So I think that kind of disruption in terms of new sources of data and information it's disrupting traditional sources, which is basically public statistics and all of this. So that's an area probably to talk about a little bit more. I think the third area that definitely has disrupted is regulation. And I think clearly we'll probably address that a little bit. But it's really forced, kind of particularly real money investors to take some painful decisions around how they pay for certain parts of their kind of cost of goods. And to some degree that's slowed down the disruption simply because the kind of prevarication and wondering how to handle that. So we've seen this kind of wave of new entrants move into this information and data space, yet at the same time there's been a time lag between the ability of the buy side to actually kind of for the two to meet.
You mentioned regulation. what's your kind of perspective on the regulators? And we can talk about the FCA, we can talk about lots of regulators actual willing to support disruption in financial services. Clearly, it's stated as an objective, but be interested in your kind of real life observations.
Yeah, I think they're willing to support new entrants and give a view. I think they err on the conservative side. Has been our experience today. I guess where I see the biggest challenge for new entrants and disruptors has been that the speed at which decision makers on the buy side, who should be our customers, are willing to take decisions.
Yeah.
And I think that will change.
Yeah.
And again, I think from my perspective, I think the trigger for that will be a recession. Because again, kind of key conclusion from this McKinsey report that was that to date, because of the asset price bubble, margins and profits have been going through the roof in the asset management space. So there hasn't been a huge driver for change. But I think that will change.
Yeah, there's a huge spotlight on charges, both in terms of charges for the actual instruments you're invested in, but also for the manager charges and the sort of financial. The review that the FCA did recently on the institutional side is going to get probably extended out to the wealth management side fairly soon, and there will be spotlight on both areas of asset management. What about you, Sean? What are you seeing?
I definitely think the front end of banking has transformed materially. If you look on your iPhone now, 5-10 years ago, you would never have been able to see your bank account and make trades, but now you can. I think the issue with disruption, I agree with Andrew, is that the back end of banking is still very old school. Sometimes it's paper-based settlements when you make a fund trade, and this nowadays is just crazy. That's why I think the power of the blockchain is so transformative and actually could potentially look to disrupt what I see as the plumbing of banking. I do agree we're still a few years away, maybe not a lifetime away.
I haven't got that long.
And I do have to caveat that we're not yet regulated in the UK, so I can't say we're transformative yet. But the idea would be if you can have a settlement infrastructure which could be interacted in an open platform like a blockchain, you could actually look at finance in a very different way. And we can discuss that at length, but I think just to start off, that for me is the power of disruption and where we could be going.
Very good.
Can I just touch actually, because you raised a point about regulators, and I think one of the things actually I was at the CBI yesterday with a number of the financial trade bodies and a number of the companies, and I think one of the things that we all agreed was that we're all struggling. I struggle in my company to do innovation right now. We're so busy just trying to keep on top of the regulation, and then obviously we've all got Brexit over the top of it all. It's very hard to innovate in this current climate. And I think one of the things that we're all looking for a little bit from the regulator was a little bit of a pause for breath, given that we've got to navigate Brexit, just to get ourselves back on track so that we can get back into that innovation aspect, because one of the charters for the regulators was about more competition. And I think that becomes really hard when everyone's constantly clamoring on the compliance aspects.
Yeah.
So there is a challenge around that right now,
Yeah.
and many people are talking about that.
Yeah, I mean, we see it. We see it with all of our clients. I was saying to Mike earlier that my business has become busy recently because there's been a little bit of pause in terms of regulatory change that's required. But obviously we need a bigger pause. But obviously there's a lot of stuff that needs to get done. So we've talked a bit about I guess our kind of individual views on what disruption means and whether it's disruption or evolution. We've got good representation here across a number of financial services verticals, and I think it's fair to say there's been more disruption in some verticals than in others, and I would sort of point to retail banking as being a space where there's been quite a significant amount of disruption, but perhaps in some other areas it's less visible. For example, in investment banking, where unless you're actually working inside the bank, it's very hard to see to actually see the innovation, to see disruption. And from my kind of personal experience, I would say, on the institutional and on the wealth management side in particular, it's been very slow to adopt technology, and there have been reasons, sort of structural reasons for the slowness, I think, in the wealth management space, where you've got a very fragmented, almost similar to what investment banking was like 20 years ago, space, and where historically technology was very expensive for relatively small players, but we're starting to see it. But I'm interested in your individual views. Mike, what are you seeing? Because you work in that space.
I think you see, if you talk about asset management, and there've been some interesting consultant reports on this. A lot of the innovation first happened on the back office, and the kind of the implementation of new tech services or tech innovation. Back office, then mid office. We've now seen a huge spike in front office trialing of new tech-driven productivity and performance tools. So I think what we will see is a big focus on the next big wave happening at the front office, which is where a big part of the cost base are for a lot of asset managers. Specifically in terms of where we see interest on the wealth and the private banking type of side, it's to develop and build kind of a more connected portfolio kind of diagnostic and construction tools for advisors who have decided that clients at least below a certain amount of AUM do not merit, from an economic perspective, a human kind of contact point. So I think for us the next big wave of technology is to try to deliver a robust and credible, forward-looking kind of portfolio application tool that perhaps is next generation from some of the robo kind of we've seen to date. So I think that specifically the interest seems to be to provide something that can connect top-down investing with bottoms-up. So really a single platform that can provide one recommendation that's starting at the asset class level all the way down to security level, and that can essentially address the big challenge of how do you provide a good reporting framework for a client's portfolio. I think that to us the biggest challenge is, if you want to work with custodians or do this in scale, is how do you actually map things like security identifiers to economic exposures. There's still a lot of challenges there in this kind of taxonomy communication that I think we will see some creative solutions.
Very good. And since we kind of touched on robos, and I think it might be interesting to the audience, what's your view? So Mike is a well-known ex-investment manager. What's your view? I know you are more on the fixed income side, but what's your view on what will happen to all of these ETF-based portfolios if we, as we are going into a bear market? How are those portfolios going to perform against perhaps more active-based equivalents?
Well, I think there's nothing wrong with ETFs per se. I mean, they're an implementation vehicle of a strategy. So at the end of the day, someone has to decide what to do with those ETFs. So, I mean, broadly speaking, we have seen an absolute carnage in the kind of active manager, global macro asset allocation space over the last 3 to 4 years. And we've seen a lot of managers exit. So I think right now, obviously we've seen this big push to passives, and we think it's exactly the wrong time to do that. So if anything, it's very hard to outperform with a global macro strategy, say, or even hedge fund, when you've had this huge bull market. So actually the right time to be kind of becoming more active and dynamic is exactly now, where we're completely changing the environment. And we're going to be going into kind of a world which requires more, not less, active management. So, if you're a new entrant or thinking of setting up a new fund, it's a good time, because actually a lot of capacity has gone out of the industry because those strategies have just been, they perform terribly. So I think, I don't know, that's probably not enough to kind of change this trend towards passives. But we treat passives as simply an implementation option. So I think the trend towards active strategies but using low-cost vehicles is absolutely the right one. But it doesn't mean that you don't need an active strategy. ETFs are just one way of,
It's an implementation tool. Alex, have you had a chance to catch your breath?
Apologies for being late.
No, I had explained that one of the benefits of having such an amazing panel is that the panel is busy and in demand. So we know we're lucky to have you here. So we've been talking about, we've talked a little bit about our own kind of definitions, I guess, of disruption, and now we're starting to talk about the fact that there's been different levels of disruption in different verticals in the FS space, and so we're talking about what the guys are seeing in each of their own areas. So what are you seeing in your area? Because it's Euroclear is kind of a sort of probably less consumer-facing animal in some ways.
That's right. Yes,
so it may even be worth spending a little bit of time just
Sure.
explaining what happens at Euroclear before diving into that.
Okay. No, with pleasure, Sharmil. Thank you for inviting me. I'm so sorry. I finished on time, and then I had the tube to contend with. Hands up in the room who has heard of Euroclear? My God. People understand what we do. Isn't that fantastic? I'm sure for those of you who don't, we are the ultimate, if you like, think about it in a sort of V shape. You've got the asset managers on the top, and you've got, they trade, and they decide, what fantastic ways they're going to trade and what assets they're going to invest in. And we've just heard about, sort of the move to active now, and I think I would tend to agree with that. I think we've probably seen in the current market, there is a much more demand now for active than there was even a few months ago. And so they then trade with brokers. The brokers trade through typically a stock exchange or an MTF or an OTF under the new MiFID regulations. And then they essentially send their orders into something called central counterparty. The central counterparty, basically, what it does is it does a risk management. So it manages the risk between trading and what's called settlement. And trading is one thing, so you have an obligation to trade. I trade with you, you trade with me, but hang on a minute, I haven't given you any money yet. Right? But as soon as we change the money, that's called settlement, right? And that happens in this sort of odd, small organisation called Euroclear. And rather a lot of it happens every day, so £1.2 trillion, which is about half the GDP of the UK, settles through our systems every day. So our systems and everything need to be very robust and resilient and all the rest of it. And of course, as you can imagine, we've got to deal with the B word. So for those of you in the room who've heard of blockchain, hands up. Okay, so quite a few people have heard of blockchain, right? So a number of people have decided that actually, hey, you don't need this old boring institution called Euroclear to do the settlement. You can replace it by a thing called a blockchain, right? And that's all very well, but then, okay, who has legal title, who actually owns the security at a particular point in time, what happens when things go wrong, various things like that. So then there's elements of, and who's going to set the rules for it anyway, and who can join it, right? Because at the moment, we have a select group of organisations who can join us. So we only have 19 of the world's largest banks who can settle the cash side of securities. So everything that goes through is channeled through those 19 organisations. Typically, HSBC, Bank of New York, all these sorts of big firms, right? And at the end of the day, they are dealing with a trust element, and they're helping you with a trust. And the actual settlement takes place not between two accounts at HSBC or an account at HSBC and an account at Barclays, but it takes place at the Bank of England. Or in the case of euros, it takes place at the European Central Bank. And we also have some clients who deal with US dollars. And guess what? As of 2 weeks ago, I'm pleased to say, we went live with a new service that provides US dollar central bank settlement. So we're the only non-US organisation, the only non-US entity that is connected to the US dollar market directly through the Fed. So all of that takes place, within our organisation. So for all of these, blockchain guys who come up and say we're going to disrupt you, then actually, well, hang on a minute. You've got to get regulation. You've got to get regulatory approval. That takes probably about 2 years and a lot of money. You've got to be able to have a system that connects to all these central banks, and you've got to basically gather market share. So it's pretty tough if you're coming in as a new business.
And are you collaborating with any of these disruptors?
That's a very good question. So, of course, we're not, we haven't got our heads buried in the sand. We are looking at what goes on out there, and what's going on in the whole blockchain disruption space. And I was actually talking I've just come from a session at the Googleplex, which of all places, where I kind of lead some of our innovation agendas. So I'm a great fan of innovation, and I'm a great fan for using, for example, blockchain, or we call it DLT, more likely, which could actually help us in a whole number of areas. But actually, in our core business, we can't see any benefit for it whatsoever.
Okay.
So that's kind of interesting. Now, there are organisations out there that are trying to eat our lunch, and we're looking at actually what they're trying to do is they're trying to really go for a bit of the area which is just outside of what we do. So typically what happens is, a company comes to market, and it goes to an investment bank, and it goes through a whole process, and it raises funds, and it puts its equities on the stock exchange, and then that becomes an ISIN or a FIGI, which is a new one that's coming through, and then that becomes a security which then ends up in settlement. However, on the fixed income side, and I don't know how much you guys are familiar with fixed income, but clearly that's a very wide market. So you have fixed income, which relates to money that you lend until tomorrow, to money that a government might lend for 10, 30 years, right? So it's a very, very broad spread. And within the short end of that market, the commercial paper and medium-term note market, if you want to issue these things, it's actually very, very difficult. And the reason it's difficult is because the process is fragmented. And this is a really, really interesting area for me, where the whole technology can reshape that space. And that's where we're looking at new technologies.
Okay, so I'll bring Sean in. Sean's got a possibly sort of slightly different spin on the use of the blockchain, or probably more specifically crypto. Do you want to tell us what you're seeing, Sean?
Yeah, I don't think there's going to be no place at all for Euroclears and other settlement companies, custodians. I think there always will be a place for centralized settlement and curation. I think it's just going to be very different. And I think regulation is definitely something that will guide how that takes shape. If we look at the Bank of England and their discussions about maybe having a digital sterling, or the US government or the Swiss government or any of the major governments that are having discussions at this level, if that happens, the idea of clearing is about having a trusted interchange, because there's an issue with counterparty risk, with timing. And if you can settle these real time, and you have a centralized record of where these transactions can be stored, the idea of what clearing and settlement materially changes. And we can look at a different sector entirely, which could be property. There's a land registry here in the UK, which stores every single transaction of property, but it's very much paper-based. If we look at the country of Georgia, which is not a place many of us normally would look at, but they have digitized the land registry onto a blockchain. Estonia as well. This injects a whole different layer of what a settlement can be, because you've actually got a public record of who the different parties are and how they've transacted. How blockchain takes shape, if it's going to be a public or a private blockchain, and how this is going to interact with regulation is not clear yet. And I think the two major topics that still need to be discussed are identity and governance. Particularly governance, who owns the blockchain if it is owned, who can rewind it if there's a mistake. But if there is a forum, which there are many groups of financial services companies looking at major blockchains, Ethereum, Corda, different types of looking at this infrastructure. And I know that you're also engaged in some of these discussions. There could be an outcome where we could look at a different world, where there still will be centralized actors, but they'll be doing very different things.
What could you tell us about what DAG Global plans to do? By the way, I know nobody sort of has come here to do advertorial, but I think actually for the audience it'd be really interesting to sort of hear about, within the bounds of confidentiality, whatever you can say about what's planned.
I mean, we could be very open. We've applied to the FCA sandbox. So here in the UK, there's a playground for you to try new ideas that aren't yet out in practice. I have done this in Switzerland. The bank that I was at previously was the first bank in the world to have crypto asset management. And the idea is fairly basic. It's just providing a custody service for a digital asset and then trading that with a fiat asset. And from our perspective, it's basically the same thing. It's just a different store of value. What we'd like to do here is replicate what we did in Switzerland with different actors. But the idea of clearing is very important because at my last bank, we got almost all of our clearing lines at risk with particularly US dollar settlements. We had one bank that cleared US dollars for us that stayed close. And in the UK, luckily enough, if we do go through the final progress and get the PRA application through and get approved, we can clear directly with the Bank of England in sterling. So that's an implicit component of the license. When it comes to international, we were discussing this before the talk, for dollar or euro clearing, we'll have to work with other parties to get that through because we won't be able to do that from day one.
Wow, that's cutting edge stuff.
We're not there yet.
Good luck with the Bank of England license.
Yes, thank you. Yes.
So, I guess we've sort of touched on this a bit, and I think Alex, actually, you've sort of, in your summation of how things are going at Euroclear, have sort of talked a bit about your interplay with the disruptors. I'd like to sort of bring some of the others in to talk about whether we feel that incumbents and the disruptors can coexist, and if so, I guess in our own verticals, how that coexistence would look. Andrea?
Well, I think we already are, I think if I look at my own business, we couldn't operate without the banks. As much as I may be frustrated how slow they are and painful to deal with, the reality is that, I need them. And equally, I think the sectors that some of us serve, they no longer want to be in. So, I think naturally there's going to be collaboration. And I think, with some of the new products that are coming out, I think we will see more of that. I think the banks, as I said earlier on, they're struggling with legacy systems. They are looking more to partner and collaborate. So I see that continuing. I don't see that changing. It's happening and it will continue to happen.
Okay. Mike, in your space?
I kind of agree. I mean, there's it's just the reality that you have to collaborate. And there's a certain stickiness to the asset management world. So when it comes to kind of sourcing clients and all of that, you have to collaborate and just be mindful of the risks of giving away IP and all of that. But it's a two-way thing. So I think it's just a reality that.
Yeah, I mean, I work with a lot of startups in some of the accelerators that I'm involved in, and actually we have clients at startups, but there is there's a disconnect, I think, between what the banks sort of the understanding of how startups work and vice versa. Now, obviously, you don't work in a bank anymore, and I guess some of your clients are institutional asset managers or wealth managers. But from kind of what you've seen, what do you think? What do you think are the things that a incumbent needs to understand about a startup in order to work better with a startup and vice versa? What are the things that these two, they're in one ecosystem, I guess, these two parts of the ecosystem don't understand about each other?
Yeah, that's a good question. I think, I think we've been a little cautious around some of the accelerator programs because I think, their objectives are not necessarily aligned.
Oh yeah, it's not about accelerators. This is just about startups in general. So.
I think that just things take time, and typically, the position of the startup or early stage is going to be very different from the incumbent. So it just you've got to make sure you've just got the right fit, basically. We haven't really had a lot of experience of that. We've kind of just plough our own kind of thorough.
Yeah, and I guess you've got a pretty experienced management team, so you might be sort of a bit atypical in terms of you're not really a startup anymore, anyway. Okay.
I would probably draw the distinction between startups who are starting up to disrupt or come up with a different business model to startups who are providing new technology.
Yeah, good point.
And there's lots of companies out there that we work with. So if you look at, I'm on something called the All-Party Parliamentary Group for Artificial Intelligence, really interesting group. They have a fantastic infographic on their website, which I would love to put up on the screen actually, which shows about the 1,000-odd artificial intelligence companies that are working in this country in different sectors. And most of those are providing, they're providing quite good services, or interesting services, interesting niches, that established players like us, like the banks, will want to use and want to make use of. So I think there's lots of opportunity to create startups without being a disruptor, if you know what I mean.
Yeah, absolutely. Okay, that's a very good point. Sean?
Funnily enough, I was on the all-party parliamentary group for blockchain, and we did a similar circle with that same company in a report we published in Q2. And I think there is, just looking at the development of technology and what's happened, a material change in even the last 10 years. I moved to this country in 2010 to build a bank within Credit Suisse, and we used an off-the-shelf IT system, which didn't give us much flexibility at all.
I guess terminals.
No comment. And if I look at what I'm doing now, you can almost have an app store of what you pick and plug and play, and it's fascinating that the cost base has even decreased in doing that. It's about 30 to 50% of what it used to be, and the functionality and the choice is much higher. In practice, I'm very curious when this is built and we move forward, how we can replace certain components of this as freely. But I'm quite hopeful that I think a lot of the fintechs in the UK, and particularly in London, are with a view towards saying current, going to use the open banking initiative that we discussed and making sure that the pieces plug together, and eventually you could just plug and play a different client-facing system.
Andrea, open banking, friend or foe?
Well, look, I'm a big fan of open banking, but I mean, it goes back to something I said earlier. I think these things take time. I think that in the UK, we probably stand the best chance of aligning standards. And standards are key here, because actually, if we want all of these startups to come in and take advantage of open banking, if all the APIs are standard, then it's much easier for them to integrate, to maintain, to actually give their customers a level of service. If you think about it at the moment, there's different standards out there. Every bank is doing something slightly different. If you're a startup, with limited funds, trying to manage all those different connections and the different service levels of the disruption, you're not able to guarantee a level of service. So I do think standards are important. But actually, I actually just wrote about this. I actually think that the regulator needs to be doing more to push on there being a standard and aligning everyone. Otherwise, it's a little bit of a free-for-all. And that's what I see at the moment. And that's one of the reasons why I think it's going to take that little bit longer, is because we're not there on standards.
Do you think that's the regulator's role? Do you think the regulator thinks that's their
No,
role?
I don't think that's the regulator thinks that's their role at all. I think the regulator had a bit of an idealistic view that, hey, we've come up with these ideas, the market will develop it, market will develop it, it will lead the way. I just think that's not reality when you're dealing with a lot of the big banks. I think, unfortunately, for some of the larger banks, I do think we need to define this for everyone. And I think that would make life easier for the banks themselves. But I think recognising that the banks have a huge legacy aspect. So I'm not necessarily in line with the timelines. I think they're saying that the APIs have to be ready for testing, I think, in April. And then everyone goes live in September. Is that reality? Probably not. Everyone will still be screen scraping. There'll be a mixture. There'll be some APIs, a couple of screen scrapes. And is that what we want? I mean, at the end of the day, it has to be about the customer experience. And I think we've lost sight of that in open banking, in my opinion. We've lost sight of what it was we were trying to achieve.
Okay. Very good. So I think we're probably going to have time to talk about both of the B words today. So we've already talked about blockchain. I think we'll have some time to talk about Brexit at the end of the panel. But before we do that, it would be interesting to go around and again, some of you have touched on this already, and to get your views in the vertical that you're currently working in, what you think the next big thing will be. It's quite a broad church, so you have as much latitude as you want, Sean.
Okay. So I do think the digitalization of everything is happening as we speak, and lots of regulatory regimes are now looking at how they can set up structures to protect consumers and businesses that engage in this space. I think the big thing that will happen is what I see, the transformation of the capital markets. So there is a lot of, I would say, underfunded businesses in the SME space, where they cannot raise debt or equity because of, again, regulation. Often capital requirements have made banks in a position where they can only lend or interact with bigger companies. And if you can offer a digital bond or a crypto bond or a digital equity or a security token, as some people call them, you can cut the costs of raising capital or debt materially. And if there's a way of listing these instruments that you can have a safe way of interacting with them, you could inject liquidity into the system in a way that I think is highly overdue, particularly in the West, where there's a lot of small businesses that aren't getting the funding they need. Crowdfunding has moved in some of this direction. I think a lot of people are going to the crowd to raise, potentially for ideas which are a bit too risky for the common consumer. But I think if people do this intelligently and in instruments that have in mind protections for the consumer and for the investor, this could be a material transformation in the coming years.
So for you, better ways of debt and capital origination, debt and equity capital origination.
And secondary markets.
And secondary markets.
Yeah.
Yeah, secondary market, that's a good point. Okay, great. Mike?
Yeah, I think I just stay on the idea of a leap forward in kind of automated tools for decision making, and I think partly related to this idea of kind of the retail market becoming a bit more institutionalized. So essentially, retail having more access to information and tools that were previously the preserve of the kind of institutional space. So I think that kind of democratization and transparency is just going to continue.
So if you're an ultra high net worth individual who enjoys the exclusivity of having your kind of quasi-institutional service where you can talk to somebody who's sitting on a trading desk, or think you're talking to somebody competent who's sitting on a trading desk, what's going to happen to all of those clients? Because they are responsible for a large chunk of the revenue that wealth managers make, and like it or not, they like the feeling of exclusivity.
Yeah, I think the bar's just going to go higher in terms of AUM level that merits that kind of service. So,
Okay. Andrea, your space?
Yeah, so payment space. So I think there'll be a much more consolidation of payment companies. We're already starting to see that in across UK, Europe, and we've seen that in the US. But I think much more focus around value adds. Unfortunately, the days are gone for businesses like mine where we could just rely on payment transactions. It's now all about value adds, and we're all scrambling to build as many as we can, as quickly as we can. So it's value adds, it's data-driven products that our retailers and merchants want to see and what they want to pass on to their consumers. So I think really that's where everything's going at the moment, and endless automation. Always automating.
What would... Payments are not really my space, so what would the killer product be, do you think?
Oh God, the killer product for me right now would be around much more insight around some of the declines that some of the merchants see.
So insight rather.
Yeah,
okay.
It's much more insight, I think.
Rather than transactional processing.
Yeah, I like transactional processing. That's where we made the money, but it's
race
not,
to the bottom now.
It is.
Yeah.
100%. It's a race to the bottom. So it's much more around the data-driven products that we can layer over the top to give our merchants much more insight, so that they get less abandonment, and much more uptake from their consumer base.
Very interesting. Alex?
Well, I would certainly echo your Andrew's points about sort of the data-driven side of things. If you look at the whole sort of capital markets chain, you've got the fund managers. I would argue that they take a whole chunk of your money when you're investing your money. You've got the broker dealers who are probably taking a chunk of it as well, unless you're going through an execution only platform, in which case you're paying for it on the spread. Then you've got the whole sort of custody network. Where do you store your assets and where are those kept? And who's your nominee and so on, and or if you're an institution, how much money are you paying your agents? And then you've got the sort of the clearing and settlement bit, which is kind of the bit we do at the bottom. Our costs are very, very small indeed. If you look at that whole stack, we represent less than a bip of that whole stack. It's just tiny, but we do a lot of volume, right? So we've got to work, and if we don't work, then it's a real problem. What can we do as an organisation? We can say, okay, what we'll do is we'll look at the data that we've got. We have a lot of data. And actually, are we using that data effectively? No, we're not. So how can we use that data more effectively? We can do a lot more data analytics on it. We're starting to do that. We're even starting to use AI in quite a rudimentary way. Let me give you an example here. So, we have hundreds, thousands of people who trade and then they settle. Okay, I mentioned the 19 banks, but there's lots of other organisations who aren't your settlement banks, who are party to the settlement. So, for example, your pension fund would have an account, and might have an account with us, and they'll trade. And so, the question is, can you see how much when settlements don't work, when they fail, right? We have I think in equities we have like a 93% success rate. I think that's right. So 7% of equities, which equates to however many billion each day, don't settle on time. And the reason they don't settle on time is because of information is wrong, right? And if you some of our sort of bright guys have looked at this, and they've come up with some data analysis on it, and they've looked at it. They've used some pretty open tool sets, TensorFlow, of course, on the AI, and they've come up with this this algorithm, or this app, if you like, which will allow you to see when you're likely to have a settlement fail. So that's a great opportunity. So hopefully we as an organisation can get some extra revenue, because we can sell it to our clients, and we can say, well, look, guys, hang on a minute. You realise that when you're dealing with this counterparty on this kind of security, your failure rate has been quite high. So, and given the sort of the current what's currently going on, the regulations are really, really forcing up. And I don't know if I'm sure regulations are an opportunity and a threat, but they're really forcing up the costs of doing trading and settlement. So, if you've got a settlement fail, you will pay as of September next year an awful lot more for that fail. And so, if we can provide them the information so they don't fail and they sort it out before they actually settle, that would be great. So
it's not just
use of AI.
Yeah, it's not just that cost. It's also the fact that you've got to have lots of people in operations running reconciliations.
Absolutely.
The rest of it.
So it saves us money. It saves our customers money.
Exactly.
We hopefully will charge some more price for that and get some more revenue from it. And then, if I look at it from the point, from my sort of side of things, the way I sort of see things is when I look at it from a technology perspective, there are a few things that are a few trends, if we call them those. You've got increased cyber threat, right? So cyber security is a big, big issue. You've got data analytics, artificial intelligence. What can you do to exploit that data you've got? You've got DLT, blockchain, crypto assets, all those sort of market over there. And you've got sort of process automation through some of these robotic process tools, right? So we look at all of those and we think, where can we use them in our space? And yeah, we're using some RPA. We're trying to make our operations more effective. But in my view, RPA is a sticking plaster. It's usually saying screen scraping. It's usually saying take data out of here, out of this system, and then stick it into that system, and that sort of thing. So yeah, it saves an operator and it saves costs that way. We're looking at artificial intelligence. I've just given you an example. We're very much looking at the whole blockchain DLT side. We don't see it being a core threat whatsoever. However, we can see spaces where we could use that technology in some other areas. Crypto, we'll have to see. Quite frankly, I mean, will that gain traction or not? I'm not necessarily. I think ultimately it will. When central banks start issuing crypto, that would be great. The European Central Bank told me yesterday that they certainly won't be doing it anytime soon. And then there's cybersecurity, and cybersecurity is a real threat, right? So the number of attacks any organisation has is rapidly increasing. It's really increased over the last sort of few years. It hasn't changed a lot from last year to this year, but you can just see that all you need is a nation, state-nation threat. Typically, we've seen it from the east coming, and if they decide really to do something, they could do an awful lot of damage, and they could actually breach systems.
Well, that's the counterpoint to the cost of technology going down is that
Agreed.
There's increased there's increased threat, right? So that's
quite
a
right.
quid pro quo, I guess.
So I would say that the technology costs, if you're developing new stuff, is going down, but the problem is, for most organisations, they don't get rid of the old stuff quickly enough, right?
Yeah, that's a good point.
So you've got to get rid of the old stuff to reduce your cost. Yeah. And then you've got to deal with the increased cyber threat. And you're absolutely right. I mean, we're spending an absolute fortune on cyber security, as are indeed most financial services firms. I work with, I know the CTO of an asset manager called Schroders quite well. And they spend a lot of money on cybersecurity because they're worried about it, and they can see that it's a real challenge for them. So that sort of thing is really interesting. But then you start to look for solutions in that space, and a lot of the solutions are actually driven by some of the newer technologies. So you've got. I was working last year with a very interesting company, which came out of the US Air Force, which effectively helps you with your identification of cyber threats. And what it does, it's like you buy the software, you plug it into your network, and it just sits there monitoring the network. And it's got a whole load of machine learning built into it, and it's trained on some of the threats it's getting. And so it sits there monitoring your network traffic. And really all it's doing is saying, okay, where is there anomalous network traffic? Where are things not as they should be, based upon our historical evidence?
Yep.
And then it learns from your own network. And then it allows you to then, and then comes up with, okay, possible, breaches before they happen. And that's really important. That's really interesting. So, I mean, none of us want to be here when, I don't want to be, CTO if WannaCry hits again or something like that. That's I know several CTOs have had to deal with that, and that's quite hard, right?
All right, very good. So I've just noticed that the thing that I'm using to keep time on the wall is completely wrong. But if everybody in the audience is would like to continue, because I think we're supposed to sort of start questions about now. But I did want to sort of give everyone a couple of minutes to talk about their views on Brexit. I guess a specific question would be, do we feel, given the deal that's on the table, whether this is going to disincentivise fintechs from coming to the UK to incorporate, and also disincentivise fintechs that are already in the UK from staying here? So I'd like to just get everyone's views on that. Sean, you want to go first?
I can't comment on the deal, but I am quite bullish on the UK. I think looking at different financial centres around the world and why we decided to base ourselves here, if you think of just the concentration of transactional flows, this is the global financial centre. And if you look at tech, which is the other piece of what I'm trying to do, and you look around the world at the other tech centres, there's very few cities that have both finance and tech in the same place. And I think if I could just push a step forward, if Brexit does happen, whatever guise it happens, the country will have to innovate to stay competitive. And I think that will be quite a supportive environment for what we're looking to build. So
I think that's a great point. Andrew?
Yeah, so actually I agree, but I think the regulator plays a part in it, and this is my moan at the regulator, that actually rather than beating all of us, they need to ensure that we remain a competitive market. But what I do think is, I do think that it may be a little bit more challenging to gain investment for a period, I think, until we actually settle down a little bit. And I do think, we were talking about this earlier on, I can speak for my own business, we've all had to make different campus strategy decisions, and so, earlier this year, I already closed down one of my development hubs here in the UK and relocated it in a mixture between Ireland and Bulgaria. And I suspect many other companies are probably doing something very similar right now. And there's no going back from that. Those decisions are made, have gone forward, and I think other large companies have made similar decisions as well.
Yep.
So I think there's a knock-on impact that we're not yet feeling here in the UK.
Mike?
Yeah, I mean, echo that. I mean, I think, just in terms of our clients, they've made some significant decisions already to exit people.
Yeah.
So the trend is in place, and it's going to have an
It's
impact.
going to roll, yeah. What about yourself, Alex? You are Euroclear.
We are
after all.
Euroclear, so it's very difficult for me, and we run the markets in the UK, the settlement market in the UK, and also in Ireland, of course. So that creates a particular issue for us. I think from a point of view, from a point of view of finance and then tech. So finance, first of all. If you look at what's happening with finance, you're seeing banks moving some of their trading operations and their booking centres to Europe. They've already done that, right? You're seeing them moving, in some cases, some of their operations to Europe.
Yep.
They've already done that, including your old bank, Credit Suisse. Moved to Dublin a couple of years ago. They're all continuing to do that. And that's what worries me, is actually, from the point of view of the finance market, yes, I think the UK is by far the largest in terms of, the European geography. Nonetheless, we are, at the margins, we are being, things are coming down, and who knows where the big issue in the capital markets is what's called clearing debate. Where will the clearing of interest rate swaps take place? Today it takes place in London through something called the London Clearing House. Interest rate swaps makes the market that I deal in look tiny, right? It's huge. It's like many trillions. And so that market, if that stays in London, fantastic. If we can get equivalence with the rest of Europe, great, and they believe it, and we managed to negotiate that, fantastic. But I'm just not convinced. I just don't know where it's going to land. And what's happening is that people are already, deciding to move their operations out, and already, instead of the London clearinghouse, the German clearinghouse called Eurex, it's called, is actually, really trying to attract people. So, who knows where that's going to go. Then I look at it from the point of view of technology. Okay, well, yes, technology. I mean, I would have argued before I joined Euroclear that London is a centre for FinTech, and I was mentoring a company over in Level 39, and I was, that's a place where it all happened for FinTech stuff. And actually, well, hang on a minute. You go to Brussels, and they think they're the centre for it all. And you go to Paris, and they think they're the centre for it all. And you see quite a lot going on in those centres, which you actually don't see from here.
There is a lot.
There is quite a lot going
there is
on.
a lot.
But nonetheless, I do think that we still have the edge on that.
Yes,
It's whether we
believe
can
so.
maintain it post-Brexit, and whether we can maintain it with our, with those European talents that we have working in those fintechs to come and work in the UK, and that's the thing. I don't know.
Very good.
My glass is slightly less than half full on this.
Right. Well, thank you very much for all
What's
of your
view,
views.
Sharmil?
I really don't know. I mean, I tend to agree with Sean, which is, the UK will always remain an attractive place for fintechs for a variety of reasons. But then, to your point, there's a lot of locations that are building out, and lots of them kind of rubbing their hands. We're about to
And by the way,
Excellent.
regulators are arms open. I mean, the French one I
They
nearly
are,
laughed at.
yes.
The
because
French are loving it.
That's just
They're
ridiculous that
absolutely
we would
loving
up and move to France.
Yeah.
But a lot of regulators are really rolling out the red carpet.
I know.
And I think in time
That's
we'll
right.
see which of those turn out to be
Yeah.
actually worth working
Yeah.
with. I think there's only a few that I would consider myself personally.
Yeah.
Yeah, that's right.
So let's open it up to questions from the floor. Any questions? Yeah.
Hi, everyone. My name is Jenna, and I graduated from Imperial Business School 3 years ago. And currently, I'm a senior consultant at EY in capital markets.
Okay.
So I have a particular question. So following on the Brexit topics, so we know that in capital markets there are loads of issues, including the transaction reporting, and then technology connectivity, and also the cloud migration, all sort of things. So how do you think or reckon technology can help banks to solve some problem, or maybe help UK to kind of drive some revenue or tackle with Brexit problem after Brexit happens? So I think currently we are thinking about more like save cost, but is there any chance that technology can help investment banks to possibly drive some revenues after Brexit?
Okay. Is that a question for anyone specifically?
It's for everyone.
For everyone. Okay.
Sorry.
Let's start with Mike.
I'm sorry, no strong view on that.
No strong view. Okay, fine. Andrea?
It's
I
not
know
much.
it's a kind of cap
I'm
markets
just-
question. No strong views?
No.
Well, I would say to that one, okay, so how can tech help us? I mean, tech, it's our use of tech that could help us if we're smarter than, if we use it smartly and we use it in the way that helps us to get out, to identify new business areas, then that would be great. But really the problem is in financial services, everyone has access to the tech. Okay, so it's a level playing field. Anyone can go and get the tech, whatever the tech is. So cloud services, okay, for example, the European Commission has recently said that it's really, I think it's called their free flow information regulation or something like that. Please don't quote me on it, but they've come up with this regulation which basically says, because of all the cloud providers, you can hold, if you're in the European Union and you want to deal with someone who's in the European Union, you can hold your data anywhere in the European Union, and no member state can force you to hold your data in one state. So that's a really important piece of regulation for the European Union. How will it apply after Brexit? I don't know, and we're going to be a bit of an island on this one, I think. But for me, it's less about the technology, it's more about how we use it and whether we can use it effectively and come up with new markets and extend outside of Europe. But again, I have a problem with this whole argument about how we could, well, great, we can leave the euro and we can gain lots of business outside of the euro. Well, hang on a minute, didn't we have that opportunity before? I mean, we were constrained in some degree, but we weren't entirely constrained, and so it's not really that much of a new market. So I don't buy. So personally, I don't think it's the answer. Unfortunately, I wish it were.
Sean?
I think it's going to be a combination of tech and standards, and I think we agree on this one. One area that I think is ripe for innovation is identity. And if you look at the compliance costs of most banks or financial services companies, they've been one area of consistent growth. And it's because we're all doing the same thing. We're always reviewing a client, where they come from, source of wealth, KYC. The idea of a digital passport is so overdue, where you could just onboard a client based on somebody else having checked and agreed that they are clean and that their source of wealth is clean. I think capital markets might be a slightly specialist area to say we're immediately onboarding a counterparty, but I think across the board, this is a cost base that can be reduced and also generate then potential new business opportunities.
This could be the differentiator, in my opinion, for the UK if we can crack the whole digital identity aspect, without a doubt.
Looks like the European Union is about to do it, aren't they? So they've got this thing called EIDAS, I think.
Right.
Which is where apparently all 27 member states have signed up to a new digital identity solution. It's probably being built, but it's if they pass that one off, that's going to be pretty powerful.
Yeah.
Yeah.
Okay.
Some countries do have it, like Denmark.
Yeah. Yeah, it's true.
Let's take some more questions. Brendan? I don't actually know you, I can just read your badge. I'm just proving my eyesight's good.
Brendan Bradley, Seismic Foundry is a small fund that invests in early stage fintech firms. There seems to be a disconnect actually between investors, financial institutions and the fintech firms. And the problem is that most of the investors don't, if we're talking capital markets and fintech here this evening, most of the investors don't seem to understand fintech. Most of the financial institutions are potentially sitting on their hands and actually not adopting as quickly as they could be. And then most of the fintechs are kind of scratching their butts or whatever, waiting for everything to happen. How do we find a way of actually getting those three connected better, and who should start that process? Is it the financial institutions? Is it the investors? Because the fintech firms are probably ready and waiting to help, but there's actually a rather long process amongst the others. I don't really think that's the regulator's job to do something there. But yeah, obviously there's lots of institutions out there where there's associations, etc., where this could happen. But especially in capital markets, in widgets, as I would call it, for B2C retail, then it's happening. But interestingly, that's the area where they're eating their lunch. And actually that's the high margin business. And yet actually in the low margin business, that's the wholesale business, they're not actually adopting when they need to cut costs.
That's a great question. Mike, as someone who's sort of had to raise money not so long ago for a startup, do you want to come in first on that one?
Yeah, I think we touched on it at the beginning a little bit. I think natural forces will, to some degree, precipitate the change or an acceleration of take-up. And we've seen a huge drop in share prices this year. So I think part of that is the recognition that the market itself, in terms of the asset price gains of the last 10 years, are not going to be the natural driver of margins that they have been going forward. So I think that there will just be an increased interest in productivity and cost-saving applications on the tech side for the parts of at least the wealth management space that haven't been big drivers historically. And as I say, I think we're seeing that now. It just takes a time. I think the big driver of the change will be a more significant fall off in asset prices and probably a recession.
But who, I guess, Brendan, are you sort of asking who drives the coalescence of these three entities to make it easier for startups to raise capital? Is that kind of a decent summation of the...
I think it should be more in the financial institutions or the investors space with some sort of collaboration between the two.
Okay. Well, as a representative of a big financial institution, Alex, what's your view on that?
Well, it's a hard one. I mean, it's like any company trying to make some money, right? In my view, I mean, it's kind of, unless I've misunderstood your question, Brendan. I mean, it's like I need to have a problem before I need a solution. So I need to have some kind of issue, right? And I think some of the problems that typically we have all had, or when I say we, the big financial institutions have had, has been how efficient are we? How costly is it to run our business? And if we can reduce our costs, that's great. We'll look at anything to reduce our costs of the same quality. So if there is an outside catalyst, and I'm thinking in the asset management time, for example, there's been the RDR review, an RDR2, I believe. I'm not quite sure if there is an RDR2, but retail distribution review.
No, there's no RDR2.
There's no RDR.
No.
You know this,
Yes,
okay? Apologies. So. Well, we had RDR, and that was supposed to squeeze the cost of everyone on the asset managers, and therefore their profit margins would go down, or they could lower their costs, and their profit margins would remain the same. So they need to lower their costs, and when these start to lower their costs, they need solutions, and very often the solutions are automation, and some of that automation could be provided by fintechs. Now, you need to have a problem statement, a business problem, such as reducing your costs for that reason, to get to go out and get some interest from a fintech, and then to pay for a fintech. From an investor point of view, well, I don't know. I'm not an investor, so I couldn't really answer that one. But I just think, like anything else, it's got to be driven by market demand.
I think there's plenty of problems out there.
Are there? Okay, well, interested to talk to you about that. What to do with it?
Some problems looking for solutions, though, right? Some solutions looking for problems.
I mean, I was yesterday. The question was, is blockchain a hammer? A hammer looking for the nail.
Yeah,
well, it probably is. So.
Exactly.
Luca from Illuminate Financial, also an early stage investor in a fund, looking primarily at capital markets, early stage businesses. I guess my question is more for the students in the audience.
Yeah, go ahead.
As I guess the younger part of the crowd here interested in a career in fintech, what is your advice to the group?
I'm sure we're all sort of.
Let's start with someone who works in
experienced.
fintech.
I'm an early entrant myself. I followed the regulated traditional space. I was on the FCA register, and I went into consulting. And I think, just following on from your question, it's quite a rare skill set to have somebody that understands regulated finance that goes into fintech. Most people go into this with the idea of a vision of something new from a more technological perspective. And I think there is definitely a space for that. But the reason I think some of these may not be picked up as quickly is because a lot of the fintechs don't understand how banking works.
Sorry?
They don't have enough mentoring. They need to be mentored.
I couldn't agree more. So I mentor, and if I may also offer some advice. I mentor on probably the two biggest fintech accelerators, definitely in the UK, possibly in the world. And I sort of echo the point around there being far too many companies who are populated by very good people, but sadly don't know enough about finance. I would say they tend to know. They tend to know a lot about tech. Well, business in general, but we're talking fintech, so there's two sides of that at least. Sorry.
You still need to know.
You absolutely do, but before the business bit, you need to know something about finance or something about technology. I would argue. There's a lot of guys and girls who are very good at digital marketing, which helps you get out there, particularly if you're doing something that's very kind of retail focused. But yeah, it's really sort of a bit sketchy when you then sort of get into actual financial services knowledge. And again, this is my personal experience. Move on because these guys should be doing talking, but is the startups which have experienced management teams, and actually we've got representatives from a number of those here, are the ones that tend to do well because they do have the understanding of the businesses that either the environment they're working in, if they're not looking to disrupt, or if they are looking to disrupt, well, you need to understand, what the hell it is you're trying to disrupt before you can disrupt it. Alex?
Well, no, I think you're probably right. You need to understand the market, right? And you understand who's buying, why they're buying, what their buying points are, and you can either get that from mentoring or you can sort of work it out. And I don't have the answer, I'm afraid.
Andrea, any sage words?
Yeah, I think if anyone's wanting to get into fintech payments, there's plenty of industry bodies. There's loads of networking events. I do a number of networking events, so especially for the women in the audience, I do women in paytech events. There's plenty out there, come along, look and learn. One of the things I would say that I really struggle with on the recruitment front, and regulation is key, but actually general management skills. And I think you touched on a really interesting point. So I see a lot of startups that come in and they're mixed into two. You see startups that are created by guys that are very experienced, have come out of some of the big corporates and have really good general management skills and the understanding of what it takes to run a business. But there are also a lot of startups out there where they haven't got a clue. They've got a great product idea, but they haven't got a clue how to run a business. So there's definitely gaps out there, but I think anyone who's got aspirations along all of the areas touching compliance, risk, I pretty much sit in general management. I kind of veer towards regulatory and technology, but I can cross all those areas. And to run a business, you need to be able to do all of that. So if you have aspirations to be a leader, you need to be able to do all of those aspects. That would be my final words on that.
Mike?
Patience and stamina.
Yeah, yes, 100%, yeah.
You're a very patient person, I know. Yeah. That's
A lot of resilience for
yeah,
sure.
that's very. I mean, that's an incredibly good point. I mean, you do see some younger folks expecting to get results very fast, and there are ways you can get results very fast, but they're not necessarily the right ways. And what my kind of experience has been with the fintechs, and actually, I know Mike's business pretty well. Patience really is a virtue. Yeah. Jonathan, who I also don't know, but I can read your badge as well. You've got a question.
I was just interested, it sort of follows on from that point, but maybe spins around the other way, and just culturally, how does fintech change the way that traditional finance institutions do technology? Because, a lot of the capabilities and the skills are relatively new. It's our Gen Zers and millennial colleagues who maybe like to work in a different way. And when I started, it was, a bank had a big internal software factory or a big internal IT shop. And now it's rather different. So I'm just wondering, how do you engage with this proliferation of kind of really interesting startups, but still have the governance and control that you need as a regulated entity? I see banks, clients who take a few guys and stick them in WeWork, and you've got exposed brickwork and everything, but it doesn't make you a fintech, right? But it's an effort at least to try and balance those sort of environments. So I'm just wondering how you kind of approach that. There's a skills shortage probably in a lot of these key areas. So do the big institutions end up internalizing this, or do you have to find a way of managing all these different little, this proliferation of fintechs and picking winners somehow and having some control over these relationships?
Who would like to direct that one to?
Who wants to take that one?
Shall I have a go?
You have a go.
So, our organisation, we had a big party last weekend in Brussels. Very, very big party for 4,000 people. Really good party. Went on to 3 o'clock in the morning, all paid for. Fantastic, really good, including travel and for other halves. But it was our 50-year party, right? And we started off as an organisation 50 years ago. I wasn't working there 50 years ago. I only worked there this year. Essentially, if I look at the technology, for example, that we run, we run the whole gamut of things. Quite frankly, we're running some really old-fashioned stuff. And if I would tell you how old-fashioned it is, but it's old-fashioned, boring. It's very cheap. It's written off, costs nothing, runs fantastic. Then on the other end of the scale, we've got another sort of product area where we've got real clients, which has been going for about 8 years now, and we've got some really interesting guys, who've got who are using the latest technology, okay. And when I say the latest technology, they're using, for example, they're using Kotlin to do their development. It's all Kubernetes containerized. They're using orchestration tools. They're using all the cool stuff that you would use these days to build a system, right? So it's like, how do you sort of get? And they're agile. They release things in 2 week sprints and all the rest of it. So how do you sort of get? My challenge is how to get all these guys working in that kind of way, and what can we take the benefits of that into the more traditional environment. Then, of course, you've got to plug into all the fintechs. Now, in my business, we're a very regulated business. We don't have a lot of external connections. The external connections need to be very, very well authenticated, which means I need to know that transaction there has come from that operator at UBS or Credit Suisse, right? And if I don't know that, I'm not going to do anything. So we're not the best people to add to talk to on that. But if you talk to the banks and what they're trying to do around their whole digitization space, they are trying to use a whole range of fintechs on the digital distribution side and under PSD2. I'm sure Andrea will probably have some points on that. But I think it is a challenge. I recognise that to keep everything relevant and interesting for modern developers, I need to make sure that the environments are more modern, and so that even when we're developing stuff for the old boxes, it's in a modern environment. I've got a big sort of transformation program looking at that at the moment. So it's that kind of thing.
Great. I think we're under pressure to get you all to drinks. So I think the majority, if not all of the panel members, will be around for a drink. But, so if you've got further questions, if it's okay, go directly and have a conversation with the panel members. I'm sure they'd love to talk to you. Thank you, everyone. I'm going to hand over to Khalid, who's going to close.
Just to touch on both I work at We Work with Express Brickwork, and the tea and coffee are great. And I think we know what we're doing, right? Yeah. And in terms of your question regarding valuation, I'm an ex-M&A guy. I've done my CFA. I have no idea how things are valued anymore. That's a big problem. It's true. It's just nonsense.
I agree. That's a mad word.
Right, look, thank you to our distinguished panel this evening. They've given up their own time to come here this evening. I hope you found the talk insightful, informative. That's the whole idea. Thank you to Imperial College Business School. Thank you to the amazing alumni team, guys. It's been hard work. I've been hard work, sorry. But thank you. A round of applause for these guys as well. Thank you. And look, to wrap up, right, the title was Changing Face of Financial Services, Disruption or Evolution. From what we've heard this evening, I think that can be replaced by creative destruction. Point one. For debate outside, are we living in a time of right tech, wrong time? And thirdly, for discussion outside, are the gatekeepers and the key holders collaborating effectively in us? Government, central banks, legal profession, regulators. I don't think they are. Because until someone knows how to commercialize this stuff, and don't get me wrong, there are some very clever people in banks. Believe me, we've had 30 years of great, great times, right? Because there are smart people how to do things. I think we're in a period here where we just really don't know how to commercialize it. And until we know how to commercialize it, a bit like the oceans and the plastic, or a bit like making electric cars by, 2030 or something in terms of diesel emissions?
I think so.
We will continue to struggle to really, really take advantage of this. But look, thank you for your time. There are refreshments outside. Please continue discussions long into the evening, and I look forward to see you again. Thank you.